Welcome to Alpha Recap. Thanks for joining us after the close. We're breaking down the big themes that dominated headlines on March 16th, 2026. As always, if you have questions, you can reach us at stockalpha.ai and ask directly in our Q&A. So, let's get into it.
Hey everyone! I'm excited. There was a lot to unpack today. Oil popped back above a psychological level, we saw an interesting AI supply chain partnership, and corporate headlines that really split the market. Let's dig in.
First up, energy. So, what really stands out here is the geopolitics. Reports of U.S. strikes on Kharg Island, combined with some inflammatory public commentary from a former president, led analysts to call this a major escalation. J.P. Morgan used that exact phrase, major escalation, to describe the regional risk repricing.
Right, and the market reacted. Brent crude held above $100 per barrel. That pushed commodity-sensitive sectors into higher volatility and changed the macro overlay for the day.
Analysts noted this wasn't just headline drama. It actually widened risk premia. Higher oil helps integrated energy producers, sure, but it also puts cost pressure on airlines, shipping, heavy manufacturers, and tech firms that run power-hungry data centers.
Yeah, that tracks. And that feeds right into inflation expectations and financial conditions. If central banks see persistent pressure, it can tighten things further. So the debate is whether this is transitory or more structural.
Exactly. Some analysts say higher oil is a net positive for energy equities. Others warn that sustained $100 oil could sap discretionary demand and compress margins in growth sectors. It's a duration call. How long does the supply disruption last?
Short reaction.
Moving on. The second big theme was AI infrastructure shifting toward hardware CapEx. POET Technologies announced a strategic collaboration with LITEON technology to co-develop next-generation optical communication modules. That announcement felt concrete, not just strategy slides.
And this matters in a practical way. POET's work centers on something called an optical interposer. Basically, a platform that lets you pack lasers, modulators, and photonics onto a single substrate. In plain English, fewer discrete parts, lower power, less latency, and potentially lower cost per bit for very high bandwidth links between AI accelerators.
Right. So instead of lots of little optical pieces being plugged together, you've got a tighter, more integrated module. That can reduce power per transmission bit and even cooling requirements at the rack level, which matters when power is one of the biggest costs in AI training.
And the partnership angle is key. Analysts pointed out that POET and LITEON together could compress development timelines and move faster to higher volume manufacturing, which is exactly what hyperscalers would want if they ramp up rack-to-rack interconnect upgrades.
So the constructive read is that optics are becoming a strategic bottleneck and opportunity as AI moves from software-led demand to hardware-driven CapEx. The cautious read is that big deployments still depend on hyperscaler procurement cycles and inventory management. Demand could be lumpy in the short run.
Right. It's optimism on the long-term structural demand, but near-term cadence remains cyclical.
Let's talk corporate headlines. Electronic Arts reported a strong fourth quarter and the market rewarded it. The stock finished the day around $199 and had returned about 15.8% over the last 6 months.
Meanwhile, Barclays reported Airbus delivered 75 aircraft in the first quarter, a data point that shows real production momentum. That contrasts with Boeing, which continues to face operational issues. Deliveries matter because they're revenue recognizable and move cash to suppliers.
And on the flip side, Service First was notable for a different reason. It's down about 12.3% over 6 months to roughly $73, after a fourth quarter reassessment that sparked debate about credit quality and regional exposures.
Yeah, that was interesting. Some analysts see the move as warranted by company-specific drivers. Others think it might be an overreaction. So it's a story that's still being argued over in the market.
Short reaction.
Moving to biotech and filings, a steady drumbeat. Multiple Form 8Ks hit the tape, including from Zenus Biopharma, Opal Fuels, and a Dentax group. Photocure presented 2 trial-in-progress studies at EAU 2026, which increases visibility and may create event-driven volatility.
Event-driven traders will like that. Clinical presentations and fresh 8Ks often create short-term repricing opportunities. Analysts noted that those windows can be high-probability catalysts for those stocks.
Quick reaction.
One other cross-cutting theme: sustainability costs for big tech. Data showed voluntary carbon credit purchases by Microsoft, Amazon, Google, and Meta surged in 2023 as companies tried to offset expanding data center emissions. Microsoft came in as the largest buyer by the dataset.
Analysts flagged 2 effects. 1. Upward pressure on operating expense if these purchases are expensed. 2. Reputational and regulatory positioning. Credits might be treated as preemptive compliance. The debate is whether these are meaningful mitigation or mostly accounting and PR.
And that ties back into margins. If carbon credit costs scale with compute, analysts suggest you should build that into margin models for cloud providers. If it's mostly reputational, the P&L impact could be smaller. Let's walk through the conflicting views a bit. Energy versus growth. Some analysts think $100 oil is good for energy stocks, but bad for growth. Others say the impact depends on duration. A short spike is different from a sustained regime shift.
AI hardware optimism versus cyclical caution is another. The POET LITEON tie-up is constructive for optics demand over the long run, but scale deployments depend on hyperscaler capex, so hardware could win conceptually but still see bumpy demand patterns.
Carbon credits. Meaningful mitigation or just an accounting cost? Analysts disagree. Some view credits as an unavoidable cost of scaling compute that pressures margins. Others view them as insurance that reduces regulatory risk down the line.
Company-specific re-ratings, like Service First, show how much nuance matters. Is the sell-off driven by credit metrics or by emotion? That's the debate, and the answer depends on digging into Q4 disclosures.
Okay, quick practical implications by investor type. For long-term growth investors, partnerships like POET LITEON and sustained AI capex point to durable secular demand for optics and data center infrastructure. But model in capex cyclicality and execution risk.
Event-driven and biotech traders should watch those 8Ks and clinical presentations closely. Photocure's 2 trials-in-progress presentations at EAU could shift sentiment ahead of later readouts.
Income and defensive investors need to note that geopolitical energy shocks increase volatility. Elevated oil means higher input costs for non-energy businesses. Worth rechecking dividend coverage and duration exposure.
Macro and portfolio risk managers. This is the one to pause on. Brent above $100 means updating stress scenarios and hedges for both direct energy exposure and indirect inflation effects. Analysts recommended rechecking stress frameworks.
Big picture takeaway time. First, geopolitical shocks are back in play, and they can change market correlations quickly. Think commodities and equity volatility moving together more tightly.
Second, AI is moving from a software story to a hardware story in tangible ways. Optical integration and supply chain consolidation are practical steps toward scaling AI compute more efficiently.
Third, sector dispersion is wide. You've got clear winners like EA this quarter versus regional bank stress in other names. That argues for differentiated positioning rather than broad brush calls.
Fourth, read the filings. 8Ks and clinical presentations create near-term catalysts. For active traders, those are the windows to watch.
And as always, balance short-term event risk with long-term structural themes. Analysts recommended scenario planning. Run higher oil baselines and stress test margin assumptions in non-energy sectors.
Final quick thoughts. Honestly, I was a bit surprised by how quickly oil repriced. And the optics partnership shows the market is maturing. We're seeing supply chain specialization that actually matters for deployments.
Agreed. It was a packed day. But a reminder, this is informational only. This episode does not constitute a recommendation to buy, sell, or hold any security, and it's not personalized investment advice. Analysts note the data and scenarios to inform further research and risk assessment.
Short reactions.
If you want our concise takeaways: 1. Geopolitical risk lifted oil above $100, and that raised short-term supply risk and volatility. 2. Poet LITEON signals faster vertical integration in AI optics, which matters for CapEx planning. 3. Corporate news showed real divergence, strong quarters in some names and company-specific stress in others.
All right, that's our wrap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next close with more synthesis and context. Have a great evening.